In the world of elite investors, one name stands out not for his public presence, but for his complete absence from it. Norbert Lou might be the most mysterious super investor on Wall Street today. Despite managing millions through his punch card capital, there isn't a single photograph of him available on the internet. Very few interviews, no public speeches, just a trail of brilliant investment decisions. Today we are going to take a deep dive into the concentrated portfolio of Norbert Lou. We'll trace the history of his investments and attempt to decode the investment philosophy of a man who takes Warren Buffett's punch card theory to its extreme. Named after Buffett's famous idea that investors should approach stocks as if they only had 20 investment decisions in their entire life, punch card capital maintains one of the most concentrated portfolios among major funds. While Lou himself remains in the shadows, his SEC filings tell a fascinating story of patient, high-conviction investing that has quietly outperformed many of his more famous peers. Okay, let's use our new tool, Smart Money Portfolios, to analyze his investments. Okay, so here we have our investors and here is Norbert Lou. So, as we can see, this is his portfolio. It is currently valued at around $315 million. He received $761,000 as dividends last quarter. That is a huge amount, especially for not a huge portfolio. And the value change is over 19 million, so that is the change of the value of the entire portfolio, and it may be caused by the stocks going down, but also we know that he was mainly selling last quarter and that he has only 4 investments, so this is a very concentrated portfolio. Okay, we have investment history here, so the number of shares he owns and the average price of those shares, and this is the dividend history, dividends received. So we can see that he is getting more and more dividends, but the last 3 quarters are really special. He got over $1 million in dividends, then exactly 1 million, and last quarter he got $760,000. Okay, and this is his portfolio, 4 positions. We can see there are a number of sell, hold, and buy transactions. So let's start with the company that he sold completely, Winnebago Industries. We can see minus 100%. So he sold this position for $23.9 million. And this is the history. So he bought his first shares in Q2 2019 for around $38. We can see that when the price dropped drastically to $27, that was the time that he added to this position a lot. He doubled it. And then next quarter, the price skyrocketed to $66 and he sold a lot of shares. So he made a lot of money in a very short period of time. So basically he took advantage of a market swing. And since that Q2 2020, he's basically holding the shares till Q3 2024, when the price was around $58. He sold a lot of shares and now the price is going down even further to $47 and he sold all of his shares. So in the long term, it seems like it was a really nice investment, something close to doubling his money, maybe a bit less. But what he did during those 2-3 quarters at the beginning of 2020 probably really moved the needle a lot. Okay, and these are the dividends from that investment. So we can see that The dividends went up, but of course he had more shares, so it's not like there was a special dividend. This spike is caused by the higher number of shares he had during that quarter. And the dividends are slowly going up all the time. Okay, and then his next position is Smith & Wesson. This is actually the first position, the smallest position he currently owns. It's Smith & Wesson, at 2% of his portfolio. Currently, this position is valued at $6.5 million. He received some nice dividends of $84,000, and he sold 22.7% of this investment last quarter, and the value of the investment went down by $4.3 million. But it wasn't caused only by the selling, also the price, as we can see here, went down from $13 to around $10. So he has less shares, but also the price is going down. It is going to be interesting to see, will he do the same thing with Smith & Wesson as he did with Winnebago Industries, because he sold some shares. Will he continue to sell? We'll find out pretty soon. And he bought this stock in 2022 Q2 for around $13. So basically we can see this stock didn't do much. I mean, it went up in Q1 2024, it was around $17, but it is back to basically the same price that he bought it for. But during that time, he also got some nice dividends, and as we can see, the dividends are growing every year. Last quarter, $84,000. Before he sold the shares, over $100,000 in dividends. Next, we have Pinduoduo, or PDD Holdings. It is 4% of his portfolio, valued at $12.6 million. He didn't receive any dividends from that investment, and this is a new investment. As we can see, he just bought this company last quarter. I recently made an analysis of PDD Holdings, so if you're interested in this company, check it out. From that, we just don't know, will he continue adding to it? Will he hold this number of shares, or what will be his choices? We will see. But it is interesting that straight away he invested 4% of his portfolio into this Chinese company. So it looks like there is a lot of conviction here, but of course time will tell. And next up we have SGOV. It is the iShares 0 to 3 month Treasury bond ETF. While many investors feel compelled to be fully invested at all times, Lou follows the Buffett playbook by maintaining a substantial amount of cash, in this case through the ultra short-term Treasury ETF. This isn't just cash sitting there and doing nothing. It allows Lou to earn modest yields while maintaining perfect liquidity for when true opportunities arise. So this investment makes up 18.5% of his portfolio. It is currently valued at $58.3 million, and he received a huge dividend, of course, of $676,000. The value went down very slightly to $130,000. So the way this investment works is basically that this is an ETF of Treasury bonds, so he gets every month a nice dividend, and the price stays basically the same. So we know he bought his first shares of this ETF in Q3 2023, and after 3 quarters he really made this investment an impressive amount, because it is 18.5% of his portfolio right now. So he is keeping cash, he is preparing for a buying spree. Okay, and here are the dividends. So these are really nice. He got $758,000 and $770,000, and last quarter it went down a bit to $680,000. $376,000. Before we move on, I just wanted to let you know that if you like this new Smart Money Portfolios tool that I'm using, you can get access to it by becoming a patron. And I will be adding new investors to it over time, and you will get all the data, calculations, and graphs way before I will post a video about it. So now, if you are a patron on a medium or high tier, you are not only getting access to the Stock Ranking Pro, but also to Smart Money Portfolios. Okay, let's get back to Norbert Lou. And finally, we get to his last position, and that is Berkshire Hathaway Class A shares. It makes up 75.4% of his portfolio, valued at $237.6 million. Of course, no dividends from Berkshire. And the value of this investment went down by $3.5 million last quarter. He didn't make any changes to this investment in the last quarter. But what we know is that he owned those shares in Q2 2019. He owned 373 shares when the price was around $318,000 for one share. And then in Q1 2020, he sold few shares, and he sold even more shares next quarter in Q2 2020. So he had 349, and since that moment he didn't sell or he didn't buy any new shares. So he's just holding that. But the price went up from here in Q2 2020 from $267,000 to $680,000. So that is a great investment. And of course, no dividends here. So that is his concentrated portfolio, $315 million. So what are the key lessons we can take from one of the Wall Street's most mysterious investors? First, Lou's portfolio shows his complete trust in Warren Buffett's way of investing. This isn't just talk, it's backed by his way of investing, but also by putting 75% of his portfolio into Berkshire Hathaway stock. Second, Lou believes in owning just a few companies instead of many. While most investors spread their money across many stocks, Lou makes bigger bets on fewer companies he really believes in. This perfectly matches his punch card idea, investing as if you only get 20 investment choices in your whole life. Finally, Norbert Lou's big position in Treasury ETF shows his thinking ahead. By keeping plenty of cash ready, he can buy when others are forced to sell. This patient approach might mean making less money when markets are going up fast, but being ready to buy great companies at low prices when markets crash. The lessons from Lou are very simple. Good investing doesn't need fancy strategies or constant buying and selling. It needs patience, strong belief in your choices, and the discipline to wait for really good opportunities. Thanks for watching, and see you in the next one.